Good morning, everybody. Thank you for joining us. This is Brian Kearney, Business Development Manager with the Entrust Group, based in our Boston area office and responsible for the East Coast for the firm. I appreciate you joining us today. Today we have a special guest, Peg Graveline with Northeast Capital, and we're going to be speaking obviously on the topic of strategies for real estate investing with a self-directed IRA. I'm going to wait just a moment for a few people to continue the login process and join the audio portion of things, and we'll begin the presentation momentarily. Okay, very good. Well, we're going to get started. Again, thank you everyone for joining us this morning or this afternoon, depending on where you're located. My name again is Brian Kearney. I'm a Business Development Manager with the Entrust Group. And today the topic of discussion is going to be strategies for investing in real estate through a self-directed IRA. And we're joined by Peg Graveline from Northeast Capital Investments as our special guest.
Hello, everyone.
Thank you for joining us, Peg. Just to begin the presentation with a quick disclaimer here, the Entrust Group is not an investment provider. We don't give investment advice or endorse any particular products. All information on the presentation and materials contained herein are for educational purposes only. So we would encourage everyone to consult your financial advisors, attorneys, and accountants before entering into any specific type of investment. So the agenda for today's webinar, of course, beyond the introduction, we're going to talk a bit about the Entrust Group, a bit about self-directed IRAs at a higher level, what can and can't be done, some specifics about the Entrust Group. I'm going to hand things over shortly to Peg of Northeast Capital Investments to talk about a variety of real estate strategies that can be employed with a self-directed IRA and some specific things that her firm is doing and having quite a bit of success with. And we'll close things out talking about some more basics of self-directed IRAs and going through some specific examples of types of real estate investments. And then we're going to open it up to a Q&A. So towards the end, if you have specific questions, please feel free to type them into the chat box on the left, and we will address as many as possible. If your question does not get addressed, please feel free to contact me directly, and I'm happy to have an offline conversation with anybody. So our guest speaker today is Peg Graveline with Northeast Capital Investments. Peg is a managing member of Northeast Capital Investments. She and her partner, Kim Harrington, have several years of experience in the distressed real estate market. And over the past 8 years, they've facilitated over $45 million in distressed real estate purchases, primarily in the residential market, and completing hundreds of short sales and real estate bank-owned transactions. So with that, I'm going to turn it over to Peg and let her begin her portion of the presentation.
Well, thank you, Brian. I appreciate you inviting me and our company to join you in this webinar. We're really excited about working with Entrust because, as you, Brian, know, there's so many different ways that people can start getting into the real estate realm by using their self-directed IRA money. And what I'm going to do is just give an overview, a 30,000-foot overview of what you can do. And then at some point, maybe we'll get back on and talk in depth about each one of these. Does that sound good, Brian?
Absolutely. Perfect.
Great. Just like Brian had to show a disclaimer, we also need to do that for our security purposes. Just want to let you know that this is not an offer to sell securities. This is truly based on education. We just want to give you a high view of exactly what you can do within your own self-directed IRA, some options and diversifications that you could use. So I just want to let you know that we do need to tell you that this is just for educational purposes. And then I'm going to just talk to you a little bit about Northeast and how it came about. Like Brian said, I am one of two principals within the Northeast company. We started back before Northeast doing just rehabs, single-family residentials, and short sales, lender-owned properties. We were doing so well in that area that we decided to open up our own fund back in 2011 and started this, or 2010, 2011, started raising capital to make our business just a little bit bigger. We're able to now get out there and buy quickly as opposed to going to hard money lenders or going to private lenders. It's just a lot easier for us to have the money, especially with bank-owned properties. Usually, Brian, you have to act very quickly. As soon as they get on the market, you gotta put an offer in it. You gotta have the money to back it. So Kim and I decided to open up a fund, and that's what we're doing right now. What we do is we buy and hold properties sometimes, and we buy, rehab, and resell properties sometimes, and we also work in the mortgage note industry. And I'm going to get a little bit more into each of these and show you how you can get into it too. So these are some of the things I'm going to be talking about today. Obviously, there are many other ways to get into real estate. These are the 5 items that Kim and I get into with our investors. The first one, obviously, is mortgage notes. That's my passion. I absolutely love it. We do first or second liens, and I know some of you are probably like, oh my goodness, why would you even touch second liens? But I'll have to let you know that it's very profitable if you do it the right way and do your due diligence. We purchase distressed real estate. That we do by either helping homeowners with short sales, so they're over-leveraged. A short sale is when you owe more on the property than your property is worth in today's market. In the Boston area where we are located, right now prices are starting to go up. Brian, have you noticed that prices are starting to go back up again with the real estate around our area?
Yeah, absolutely. I'm personally in the market for a new home, and it's been a staggering shift.
Yeah, it really has, and I don't know about you, but I've noticed it just over the past 3 months. And I know that some of you are across the country in different areas, maybe slower to build that up. Austin area didn't have the downturn in the housing market as much as the rest of the country. So we didn't see the low dips like a lot of other places, specifically Florida, Arizona. So it didn't dip that low, but all of a sudden in the past 3 months, things are now going higher than the assessed value of the property. So, I want to put a little asterisk next to purchase distressed real estate, because right now we're not only doing distressed real estate, but we're now purchasing, anything that's on the market that people just want to sell and needs a lot of work to do, and they feel like the homeowners cannot get in there and, update the kitchen, update the bathroom to try to sell it at the price they need to, so they'll turn it over to us. And we buy it as is. Even if it needs a new septic, we'll buy it as is and we'll move forward. So once again, distressed real estate in this area is talked about lightly at this point. We do still do short sales outside of the Boston area, because as you move away from it, we still can work in that short sale REO realm. So another area that you could get into is funding syndications for commercial properties. We'll get a little bit into, I have a slide on that, just to some people do not understand the syndications. and how they can get into commercial properties. Some people are pretty overwhelmed if you think about, oh my goodness, how can I get into a $3 million property? I'm going to let you know how you can do that. And then the other, another way of getting into real estate is lending private money, to investors. We have a lot of people that are out there that are just like, you know what, Peg, Kim, I really don't have time to do these rehabs. I really love what you're doing. How can we make it work? We're always out there looking for, private money investors. We work out deals with people. So, this is something that you can find investors in your own area that are looking for something like that. You can get hands-on with the rehab or, hands-off. And then the other thing is funding real estate private placement memorandums, which is the fund that Kim and I established, which, this is for real, I want to make, I guess the biggest thing that I would say is, the stock market. You want to put your money into something, it's going to make some money, and, it's more of a hands-off, that they're doing it, you're getting your coupon payment. So there are those 5 things that I am going to talk about. Once again, Brian and everybody that's on the line, there are so many other ways of getting into real estate, but these are the 5 that I'll be talking about today. So the first thing I will talk about is my passion, which are mortgage notes. In the Boston area, it's pretty funny. I've gone to so many conferences just around here, and I tell people what I do, and they're just like, how do you get into that? I also went to a conference in Las Vegas. I went to another one in Texas, and everybody in that area is doing all of this. They're buying mortgage notes. They're buying just one mortgage note to add to the diversification of their investment portfolio. This particular area in the Boston area, it's very new. People don't understand that you can be the bank. You truly can see and own a mortgage note just like a bank does, and see those monthly payments just coming in. The reason that I like mortgage notes personally, my husband and I do have it within our own self-directed IRA, is because I don't have to think about, fixing toilets or the homeowner calling me because the heating system is gone, or, what I'm doing is I'm getting a monthly payment on the amount of money that I paid on that mortgage note, and it comes in, it's set up with a servicing company, so if something happens, the servicer will say, hey, such and such hasn't been paying anymore. It's okay if you call that homeowner and say, hey, what's up? You can work out anything with them. The other thing in mortgage notes, you look at almost the same thing as you would if you were buying an actual asset. So you still want to look at location, and you still want to look at loan to value. What position are you in? Are you in the first position? So obviously it's going to be a higher amount that you're going to pay for that mortgage note, or are you in a second position where, it's secured. It may not be secured fully, but because of that you may pay a little bit less. So it's, sometimes it's easier for newbies to get into the second mortgage because, sometimes if you want to spend $5,000 and start getting a return, you can buy a distressed second mortgage that has a face value. And I know that I'm probably going way above everyone's head, Brian, but a face value of like $50,000. But you're only spending $5,000. You work with that homeowner, get them into a situation that they're paying again, and then all of a sudden you have a mortgage that, over 20 years you're getting what, $200 a month. Maybe they gave you a little bit up front for good faith. Getting into it. I once again, this is my passion. I love mortgage notes. And then you have note terms. So work with the interest. How long? What kind is it? Is it a conventional fixed, or are you going to work with balloon payments or anything like that? You are the bank. You get to kind of figure out, as long as you stay within the criteria of what the government says, you can help that homeowner out. And socially, it kind of makes you feel good that you can help out a person in a distressed situation and help them with their payments and get them lower, knowing that you paid $5,000 or whatever that number is. And then you also want to look at the fair market value of that house. As much as you're not buying the asset as you would if you were doing a rehab, you still want to know what the value is of that house and if that homeowner is going to keep up with the house as far as keeping it nice and clean and on the outside. You don't want them to get into a situation where they've given up and everything gets overgrown and then the fair market value drops and there goes your value of your mortgage note, or it could go into foreclosure or something like that. So you always want to be aware of the fair market value, and in my eyes, that's much easier than going to fix a toilet. I can go and look at fair market value all day long and make sure that everything is doing okay with that. The next one is rehab. If anyone has watched, HGTV or whatever, there's tons of those rehabbing shows that are on the market right now. Brian, have you seen any of those?
Oh, yeah. Flip this house, flip that house. There's several dozen of those programs, sure.
Oh, they make it so easy. You go in, you buy the property, you put the fixes into it, you sell the property, you make $100,000. They make it look so easy. So every Tom, Dick, and Harry could go out there and go do this. Well, I'll tell you what. Lately, we have been bumping up against some of these people that don't do their homework. So we put offers in on homes. We know exactly the highest offer we can put in, and we bow out if it gets any higher than that. Usually the people that are putting in are also looking to rehab it, and they'll go like 10, 20, 30,000 over what my highest was. And I'm thinking, how are they ever going to make any money in this property? And I know people, there was one guy that I talked to 2 weeks ago that bought one. He outbid me and just sold it. I just saw that he sold it. And I went and talked to him, and I'm like, so how did it turn out? He goes, Peg, I made $2,000 on it. And I'm thinking, man, that's why you have to do a lot of your due diligence. And he goes, I wish I knew that, and now he does talk to me. He gives me a call and says, thinking about putting in this for an offer. Do you think it's too high, whatever. So I just want to let everyone know you can do this. Anyone can do this. Just know that you have to do your due diligence, and all those bullet points I have on there are things you have to consider. So you're going to get into it. You got to make sure the location. I can tell you an example of that. Back when I first started this, I found one in New Hampshire. I was like, this is a golden property, Brian. This was just it was just a beautiful cape. It needed updates, and it was an estate sale. Unfortunately, the homeowner had to go into a nursing home. And they were able to just sell it over to us. We bought it in 10 days. I think they really needed the money, so we bought it with cash in 10 days. I'm like, this is going to be a slam dunk. We went after that. We put in a new bathroom. We updated everything. We knocked down a wall to the breezeway, put in a dining room instead. And if anyone wants to go to my website on Facebook, you can actually see it on there, Gem Property Group. But you can see it on there. We actually did not make much money. I think we made just about $2,000 on that one. I thought this was a killer deal, and when I say location, 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 it is a killer deal if it were in a different area about a mile away. This one was on a busy road. It wasn't like a main street kind of road, Brian, but it was like an off-side street, but it still was a cut-through to a lot of other places. It had a double line, and that's the way I look at this house now. It was the double line property, and it would not sell because of the traffic on that road. It killed me because it was such a beautiful property. And the person that bought it, say that again?
Concern for a lot of people with small children and things like that is.
You got it. You got it. So we turned away all families. I mean, they walked into the property, they stood there for a little bit and saw the cars flying by. We had a fence in the front yard, so it's not like we weren't thinking about those families, but it still just wasn't good enough. And the person that bought it absolutely loved the house, but she had grown children that had already moved out. It was a small little cape, and it was perfect for her. It had a first floor master suite and exactly what she was looking for. So, you live and learn, and as much as, you stab my heart when it comes to that property because we didn't make what I thought we were going to make on it, you move on and go on to the next one, and that one you'll know, location, definitely in the northern part of New England. You want to be in a neighborhood, and, where you are, you got to kind of think about that. If you're in Boston, like you are, Brian, people with cut-through streets, it's okay to have a neighborhood and be in a house like that. But if you're going into southern New Hampshire where this one was, a lot of people are like, no, there's enough neighborhoods that I can get into for the same price, then why would I buy this one on this busy street? So,
well, thinking about the end buyer seems to be an important
huge, exactly. So, you look at structure when you walk into this property, any properties that you're thinking about. Look at your structure. Look at what you're thinking of doing cosmetically. You have to think about and know in that area what kind of permits you need. For this particular house, we needed electrical throughout, brand new electrical system because it was still tube, not in tube. Are you going to be working on it? Are you going to hire a contractor? What kind of financing are you going to get? Are you going to get hard money? Or are you going to get private lenders that maybe want to JV and take part of the profit that you make at the end? You want to look at holding costs. You got to pay for electric. You got to pay for the oil. Especially in New England, we got to pay for the heat in the wintertime. Selling costs. You got to think about what are you going to spend just with your agents. Are they willing to only do a 4%? But I'll tell you what, most agents right now, their commissions are 4, 5, 6%. What are the project costs? How much do you want to make per property? And all of these things they've all come together. Over the past 7 years, Kim and I put together a spreadsheet. So what we do right now is we don't even go see the property now. We look at it online. If people are sending them to us, we'll plug in the numbers. And if those numbers don't come out to that second to last bullet, how much do you want to net? If it doesn't even come close to that, we won't even look at the property. It would be a waste of our time to go out there and look at it. So big to-dos. Again, I don't want to scare anyone away. Anyone could do this. It's more of you've got to have your due diligence. And if anybody wants to talk to me offline, I can give you a little bit of advice on, different areas that you're in right now. I would love to help you out. So real estate private lending. So this is more, I still work 40 hours a week, Peg, but man, I love what you do, or, I know that this is going cross-country, so I'm sure that if you head to some local real estate investment group, you might be able to find somebody that's doing these things. Go look at their properties. Go look at what they're doing. Ask them for their profit and loss. Ask them for, what are you making on most of your properties? See if this is where you want to go. Because there are a lot of people that love their job. If you ask my husband, he'd be like, I would never quit my job. He loves it. However, he does like that he's able to put his money into real estate investments. So this is what you want to do if you want to be a private lender. You want to make sure that you know that person, do your due diligence, walk through the property, look at his exit strategy, interview his contractors. Is he a good guy to work for? You want to make sure that he has his license, if he has an agent license, or if his agent, just kind of check and see, all of that kind of due diligence. Do you want to take a lien position in it and have them fill out a mortgage? You can do that. Or do you want to be part of the project, and once the net profit comes in, take a percentage of that? These are all things that you can definitely work with that person on. And I'll tell you what, I know that we have done a lot of different things with private lenders. If you go out there, once again, if you are thinking about this, get into a real estate investment group in your area. You can Google it and get your name out there. start talking to people. You'll be able to help them fund and be part of their projects that are out there. Now, this is the thing that I talked about earlier, syndications. A lot of people out there don't think that they can get into the big buildings and be able to be part of an equity split of this. But there are tons of people and funds that are out there looking for private money for a syndication to work on one particular multifamily or commercial property, kind of like a plaza. There's like a Lowe's, and then it's like a strip mall, goes down to like a grocery store. I don't know what grocery store in your area, whatever a big grocery store would be. You can get into this. The way that it works, unlike a fund, which I'll be talking about next, what Kim and I established, is a syndication is brought together for one particular property. So what you're going to do is you're going to meet with the person that started the fund. You're going to learn all about the project that they're working on. And once again, this is only one real estate project in a syndication. I know this because my husband and I are also part of a syndication. We put money in, and I'm not going to talk about us, but you can put money into a syndication, and what that does is it raises the capital so that there is a deposit for the amount of money needed to get a mortgage. So what you would do is be part of that fund to raise the capital. Most commercial banks want you to put like 30% down or whatever it is. So, 30% on $3 million, you've got to raise some of that capital, be able to put it down. The mortgage is established at that point. Then your coupon payments will start coming in on whatever quarterly or bi-yearly basis. So this is just another way of getting into more of the bigger projects in commercial. It's really fun to say that, I'm part of a syndication of a 101-unit apartment down in Mobile, Alabama. It's kind of fun being in Boston saying that I am part of that. The way to find these people, once again, you can go to real estate investment meetings around your area. You can Google a couple of different things. You can Google syndication. The best way that I have found to learn about people that start syndications for this type of project is through the real estate groups. That person may not be there, but there may be people there that do know that there's somebody out there trying to raise capital to do something like this. And then on the flip side of that is what Kim and I decided to do, which is start a private placement. And the private placement is also a fund that brings people's money together, except for the fact that this private placement fund would be for several different real estate transactions. So like the syndication here, which is just for one huge multifamily or strip mall, you go into a private placement fund like this, and it's used for for our particular one, it's used for 1 to 4 family properties. It's fast turnover. The money goes in and then comes back, and then we'll purchase another property and comes back. We'll purchase mortgage notes and make the money that way. It's just a different way, once again, of getting into real estate without really having to think about, destroying walls and putting in new kitchens. It's really, there's so many different ways to get into real estate that I just wanted to touch on some of them. Once again, investing in real estate, private placement funds eliminates the need to be a landlord if you decide that you want to buy and hold and you want kind of a passive income coming in. It eliminates the need for you to go find those properties or assets. It eliminates, you going to look for contractors or finding buyers after everything's been done and trying to find somebody to come buy your property. But I'll tell you what, all of these different things to get into, and as far as real estate is concerned, just diversifies your portfolio. And Brian and I talked a little bit about this. We kind of decided to put this together because a lot of people don't understand that you can use self-directed IRA monies to get into real estate in this aspect. So Brian, once again, I want to thank you for inviting me to join you for this webinar. I would love to talk more about each one of these separately as a whole new webinar by itself, just to let people know a little bit more in depth what goes into each one of these, and maybe we could do that at some later point. But
Sure.
I'm putting up my email address. You could either contact me at the 800 number, or I can also give you my personal cell phone number, which is, if anyone has a pen, it's 603-493-0992. If you have any questions, feel free to give me a call. It's probably easier to just go to my email address if you have any questions about anything. I would love to help you. That's one thing that Kim and I have decided that we love as part of our company is we love doing some consulting. You know, if you're like, oh my goodness, what should I do? What should I get into? It's a lot of going back and forth to see what your needs are. Brian, I know that you and I talked about that. I think that you
Sure.
and me and another person, you know, if they're kind of figuring out where they want to go, you know, the three of us could get on the phone together and kind of help them out in a good direction as far as real estate is concerned.
Mm-hmm. Very good. Well, thank you very much for your comments, Peg. I think that it was very well presented and laid out, and certainly gives people a lot of food for thought of various types of real estate investments that may or may not have been considered, aside from the traditional fix and flip or buy and hold rental property. There are a lot of other ways to participate in real estate without making it your full-time job.
Mm-hmm.
So I appreciate your comments, and certainly would encourage anybody who wants to speak further to contact Peg at any of the contact points she's given here. I'm just going to take over the presentation now and talk briefly about the Entrust Group, give a bit more information about self-directed IRAs in general, beyond what we've already spoken about, and then open it up to questions. I'm sure there's going to be quite a few. We've got good participation on the webinar today. So with that, about the Entrust Group, I know several people on the webinar are already clients of ours, and we certainly thank them for that. But for those of you who are less familiar with the firm, Entrust is one of the oldest self-directed providers in the business. We've been doing this over 30 years. We've got over 15,000, I believe close to 20,000 clients right now, and close to $4 billion in assets under administration at our firm. So one of the biggest providers out there, have a lot of experience in self-directed IRAs. We have a very knowledgeable staff. Everyone who is eligible has earned their CISP designation. And we try to be educators out in the marketplace, as clearly evidenced by this webinar and the very frequent ones that we host, in addition to in-person meetings we host at our local offices. We really want to help people make educated decisions and provide the framework to fulfill their investment goals. Some reasons for choosing self-direction. I'm sure most people already have their own reasons, and that's why they're participating in this call. But it really gives you the opportunity to invest in things you know, and in the case of real estate, things that are often tangible. A lot of people, I think, are nervous with what's going on in the stock market right now. Clearly, couple that with the bond market yielding almost nothing, very low returns. People are looking for alternatives and things that are not traditional investments, but are still permitted by law, by the IRS, to be done within their IRAs. So in the case of real estate, it certainly allows you to leverage your knowledge, bring some expertise to the table, and really put your retirement dollars to work in an area that you better understand. Some examples of other things that can be invested in. Clearly, Peg gave a lot of great examples, and I'm not going to rehash that, but aside from the obvious with real estate, Entrust can facilitate investments in precious metals, limited liability corporations, limited partnerships, secured and unsecured loans, joint ventures, trust deeds. Really, the only limitations that are in place as far as investments with a self-directed IRA are set forth by the IRS. And specifically, you can't invest in collectibles, so things like an antique car or a painting, things of that nature, things you could get a current benefit or enjoyment out of. You can't invest in an S corporation, and you can't buy life insurance with your IRA. So things that don't come up too often and most people wouldn't be considering investing in, just know that those are things that are not permitted. Aside from what isn't permitted to be invested in, there are certain restrictions as far as who your IRA can and can't do business with. They're called disqualified persons. An easy way to think of this is lineal family members, parents, grandparents, children, grandchildren, and all of their respective spouses, your own spouse included, are generally considered disqualified persons. So you couldn't own an investment property, for example, and have your daughter as a tenant. That would be considered a prohibited transaction. So if there's questions on that, feel free to contact me after the webinar. I'm happy to discuss that more in depth. A few examples of acceptable transactions, partnering with yourself on a new deal. So you can partner your IRA and your non-IRA money. Oftentimes I see that done through an LLC, and it's a means to bring additional capital to the deal that you may not be able to finance an entire project with just your IRA. Partnering with your cousin, or while it may seem contradictory to the last side, partnering with your spouse on a new deal. There is a way that that can be done to partner with your spouse on an investment, and we can talk about that on an individual basis if that's something you're interested in. And finally, leasing property to your siblings. If you notice on that lineal family member list back on the last slide, siblings are not considered disqualified persons. So I've seen many deals where where a lease is going to a sibling, and it is perfectly acceptable. Just a few quick examples. I'm going to go through these fairly quickly because Peg gives some really great examples of some real life experiences she's had, and I don't want to rehash things. But in short, there's two ways that real estate can be purchased from an IRA. Either it can be done directly from the IRA, as this slide details, where the actual purchaser of the property is the IRA. So the name on the deed would read the Entrust Group, Inc., for benefit of John Smith IRA and your account number. In that situation, all cash flow needs to go in and out of the IRA. The purchase and sale would be affected by our real estate department here at Entrust on behalf of your IRA. And we would sign the paperwork basically on your behalf. So that's one option. The other option that we see a lot of is purchasing property through an LLC, where an individual would establish a single member LLC into which their IRA invests. In that situation, Entrust views this as a investment in a private placement. And once the money is in the LLC, it gives you a little more latitude to affect the real estate transaction yourself. Gives you the quote-unquote checkbook control to hire and fire contractors, have rent collected into the LLC, pay bills, and so forth. It takes our firm out of being the middleman on a lot of the elements of the deal, so a bit of an advantage there. Certainly could save you on check fees if we're versus having us pay the electric bill every month and the cable bill and things of that nature. Allows you to affect those transactions yourself. Ease of investing, immediate access to funds, and of course limited liability protection from claims, slip and fall, that sort of thing. Disadvantages, of course, there is generally a cost to create an LLC if you're working with an attorney or an accountant. Many states will have additional filings and taxes that you may be subject to. So certainly something to look into in your state of residence or the state you'd be looking to establish the LLC in. There is an onus on the investor to maintain good records. So you really want to keep tight accounting, keep all your receipts, keep all the information relative to the investment, really to protect yourself. And final example, again, Peg went pretty in-depth into some options with purchasing real estate notes, but know that that is something that can be done directly from your IRA. It would be seen as the IRA would be a trustee investor, acting as in the capacity of a lender, lending money to a borrower, and generally the real estate is being used as collateral in that transaction. Again, as before, all income, cash flow must go into the IRA, and a nice benefit here is generally that the loan is secured with collateral in the case of default, so it gives you a bit of protection against losing a significant amount of money. So those things being said, just briefly, 3 steps to moving forward if you decide this is something you're interested in. First step, of course, is establishing an IRA with the Entrust Group. And that's a pretty quick process. When we get paperwork in good order, generally we can actually open an account quicker than it lists here, oftentimes 24 to 48 hours. But 3 days, I would say, would be on the long end of that. So that's a quick process, getting your account established. Second would be funding it from either another IRA at a different provider or doing a rollover from a previous employer-sponsored plan, 401k or 403b or something of that nature. That transfer time, once the request is sent out, really varies, quite frankly. It can take a few days, I've seen in some cases, and in others it can take 3 or 4 weeks. So it really depends on how cooperative that surrendering provider is and how quickly they act. But know that that can be something that takes a bit of time to get your account funded here. And the third step, purchase your asset. Once you've decided what investment you're going to make, there's going to be some paperwork required on our end and things to help us effect the transaction on your behalf. And generally, once we get that in good order, we can purchase your asset and make the investment in 2 to 3 days. So again, pretty quick process on our end once you make that decision. So with that, I'm going to open it up for questions. If you have any, feel free to type some in the chat box, and Peg and I will address what we can, time permitting. Of course, we want to be sensitive to everyone's time. We're about 45 minutes into the webinar now, so if we don't get to address your question directly, again, please feel free to contact me at the email address or phone number listed on the screen now, or Peg at either of her contact points listed earlier. Okay. And to ask questions, underneath the chat box there's a separate tab for questions. So you can right-click on there and type them in if there are any. Okay. Peg, do you have any last thoughts or common questions that you get?
Yeah, what I have to say, a common question that I get is, why would you truly buy a mortgage note out of the area that you're in? It depends on the strategy that you want to work with. For example, Kim and I love to buy first mortgage notes in the New England area, specifically close to Boston, because, and I hate to say this, but if it is a distressed mortgage note, we actually will move forward to help the homeowner get into another situation and do a cash for keys, because our second side of our business is to do rehabs. So we can kind of put our notes and our rehabs together in that aspect by helping out a homeowner. So socially, we're still being responsible. So we're going to do a cash for keys, get them in. We have a lot of agents around the area, so we'll get them into either an apartment or a home that they can rent if they have children, they still want to be in that school district or whatever, but just can't seem to get back on their feet again and start paying their mortgage. So what we'll do is we'll purchase a first mortgage in the area, knowing the exit strategy is to help that homeowner out so that we can get in and rehab it and then sell it for our profit. So that's a real big question we get a lot. As far as purchasing mortgage notes across the country, we'll actually have a different strategy. So you look at an exit strategy of, okay, we want to get these homeowners to start paying again. So our strategy is let's buy these notes from pennies on the dollar, get these people paying again, maybe get them to pay some arrears so we get almost all of our capital back. And then they start doing a monthly payment of, $100 to $300, depending on what that mortgage note looks like. So that's a big question we get is like some of the exit strategies. And I'd love to actually, Brian, talk to you a little bit more about that if we could at some point. But
yeah, absolutely.
Yeah.
Well, thank you for that. We did have a few questions come in as you were speaking there, Peg. First one from Robert Paulson asking about getting copies of the presentations. Actually, we're going to repost this webinar. It will be on the Entrust website, I believe. Generally, they're up within 24 hours, so probably sometime later tomorrow we should have a replay available of the webinar on the Entrust website. So if you go to our website, www.theentrustgroup.com, there's a tab at the top for a Learning Center and then a sub-tab for Events, and you have the opportunity to scroll through archived webinars, of which I believe there's several dozen up there at this point on a variety of topics, different investment types, not just real estate, but all sorts of things that we can facilitate. So I'd encourage everyone to look at that, and certainly those that had to join late today, starting tomorrow, should be able to view this in its entirety. Next question from Dorn Williams regarding private lending. And Peg, I might hand this one to you if you're seeing the question. I guess I'll preface by saying there's a variety of types of private lending that can be done. For the most part, it comes down to a mutual agreement between the lender and the borrower. But Peg, I don't know if you have any additional comments on bridge loans and so forth.
Definitely. So private lending, it really is a match, Dorn. I think that it's a really great question. People ask us, what do you look for? This is when I say to you, are you looking for more of a passive kind of investment where you want just an interest rate, points and interest or whatever, or do you want to be part of the deal and, make some kind of equity split with it? As far as the interest rates are concerned, it really depends on what you're looking for. So kind of, I know that Brian had mentioned what the stock market is bringing in right now. Obviously you want to make more than that. It's a higher risk, so you want to also think about that. So usually, you're going to want personally for private lending 8 to 12%. And that's usually what we will talk to that private lender, and when that comes in and wants to do some deals with us, just to try to get a feel for the projects that would be good for them. So, if it's an 8% private lender financing, it's probably one that, is going to be a slam dunk home run. We could get financing anywhere. If you want to come in on the deal, we'll give you the lower interest rate and hopefully make it work that way. If it's a 12%, it's usually a higher risk, maybe not in the best area, but we know that we're going to, do a stellar deal on rehab on it, so we'll be able to sell it. As far as the length of the loan, what we do is usually 6 months. But once again, if you find another rehabber out there that's doing things, sometimes if it's a bigger project, they'll ask for a 12-month length of the loan, and sometimes it could be a smaller one like 4 months. If it's a quick, what I call lipstick on a pig, paint it, throw a kitchen in and call it a day, you could do that in 4 weeks. So maybe like a 2 or 3 months, 4-month loan. I hope that answers your question.
Yeah, I've seen things run the gamut from my perspective as well in terms of interest rates and duration. I mean, it really depends on the deal.
It really does.
The riskiness, as you suggest, the location, how well do you know the borrower? Have you done business with them before? And certainly if there's been a good experience, that might lead you to structuring a better interest rate if there's more security. And certainly if there's collateral attached, obviously that affects things as well versus an unsecured note. A couple more questions here. David Callahan asking about an existing LLC for real estate investment and whether IRA funds can be transferred into that. Generally, we don't recommend that. We tend to advise clients to establish a new entity for that sort of investment. You really want to avoid commingling funds, especially with pre-existing investments. It can lead to accounting issues and potentially IRS issues. So typically when we have clients investing in real estate via an LLC, a new entity is created rather than investing through an old one. I hope that answers that question there.
I see that, Dorn Williams, it looks like you had a second question also and talking about short sales. And he mentioned, he said short sales, purchases fail when the BOA cancels the short sale. Is there a way to approach the mortgage owner and avoid the foreclosure? Has that ever worked? The short answer, no. Short sales are not short whatsoever. I'm sure that everybody has heard that joke. Short sales are the longest things that you've had to work on. I actually have worked on one for 2 years, finally had it closed. BOA is very difficult to work with. That being said, we just got one approved last week, and we're closing on it on Friday. And some of these lenders make it difficult. I'm not quite sure of why, but they make that short sale difficult, saying that they've lost the documents and you have to keep sending in the documents. We've been doing this for 7 years, so we've really established a lot of negotiators within the big lending firms and really ask for them when we start a short sale. That being said, if it is canceled, approaching the mortgage owner, it depends on the value of the house. So I don't know if you can look into your deeds or talk to that owner to see what it is that they owe on the property. Sometimes, like I said, around this area, and Brian and I kind of talked about this, the values are really going back up in this area. So if it is a short sale, it's because they lost a job or whatever, but maybe, that mortgage note isn't over leveraged, but they just can't sell it because they've let the house go. Right. So there's a point where you could get in there, and this, I have to say, preface this with, I haven't done this yet, but I have been thinking about it, talking to the homeowner and taking over the mortgage payments, maybe paying off the arrears, to get the mortgage payments current and then purchase it from the homeowner. So say they owe $20,000 in arrears because they just haven't paid. They only owe, and I'm just going to use easy figures, $100,000 on the property. It's worth $150,000. They're $20,000 behind. They can't catch up on it. You say, hey, let me pay down the arrears, and I'll pay that purchase price. I'll pay and take over the mortgage. These are different strategies, thinking outside of the box of things you can do as far as approaching the mortgage owner. But it really, Dorn, it really has to make sense as far as what they owe on the property.
In fact, I don't know if you can speak to my point I'm about to make with respect to institutional investors. in your experience, we've seen more and more people kind of getting edged out of some of these types of opportunities, foreclosures and short sales specifically, where there's the big institutional firms, a lot of times publicly traded companies that have gotten into this market as a means of diversification of their portfolios, and becoming more and more difficult for the the little guy, the smaller investor trying to do it themselves. Have you bumped into that in your experience?
I have, and I've done it. I've bumped into it both with single-family residential and with our mortgage notes. So just starting on the mortgage notes, when we go and purchase them, obviously we're not a huge fund. We can't go to Wells Fargo and say, hey, can we buy $500,000 worth of notes? They'd laugh at us, because the hedge that are coming in will buy $100 million worth of notes,
right.
And that's what they're looking for. So they go ahead and bump us out of that area. However, that being said, we can go to hedge funds and purchase smaller little packages from them. They keep the good stuff. They keep the gravy, and they give us all of the other stuff. As far as single families are concerned, there are funds that have been started, just like the private placement fund that Kim and I started, as a huge fund. It's say it's a $50 or $100 million fund, and they'll just go around to these banks once again and bump us out. So they don't even make it to the MLS, or they don't even make it to the market for single family purchasers like us or anyone that's out there, because these bigger funds will go and hit these bigger banks first and say, you know what, I have this $20 million capital and I want to buy whatever, amount of houses in this area. Can you give them to me? And it's a really good question, Brian, because it really came about 2 years ago that this all started. Before that, when Kim and I started the company in 2005 and 2006, we were able to get houses like nothing. And now, we really are fighting up against these bigger companies that have gone into the mindset of a buy and hold. I know a company that buys as much as they can up and down the East Coast, single family, and that's all they do in their fund is buy and hold, and they do coupon payments for these buy and holds up and down the East Coast. So, yeah, really good question.
Yeah, well, thanks for your thoughts there. Well, we are bumping up against our full hour here that we had allotted for this call, so I guess we'll wrap things up here. Hopefully we've addressed a lot of the questions out there. Again, I'd encourage anyone with further questions or wanting to talk about a specific situation that they're facing or that they're considering, please contact myself or Peg directly. We're happy to discuss things with you and give our best guidance depending on the topic. And again, thank you very much, everyone, for participating. The replay of this should be up tomorrow on the website, and we appreciate everyone's time. Have a great day.
Thank you, everyone.
Thank you. Please stand by.